In 2026, millions of Americans are opening their insurance bills and freezing in shock. A payment that used to be $140 a month suddenly becomes $260, then $340, then over $500 for the exact same car. No accident, no ticket, no warning. And while most drivers blame inflation, a growing number are quietly discovering something else. There are completely legal ways to beat the system. Not scams, not loopholes, real insurance strategies that are saving some drivers hundreds every single month. But here's the strange part. Most insurance companies never clearly explain these tricks, because the longer drivers stay confused, the more money insurers make. Tonight, we uncover the hidden world of auto insurance pricing in America, the apps tracking your driving, the data companies buying your behavior, the discounts many people never activate, and the legal tricks smart drivers are now using to save thousands in 2026. This is the auto insurance reality Americans are waking up to. For decades, Americans treated car insurance like a boring monthly bill. You paid it, ignored it, renewed it, and moved on. But in 2026, that system is collapsing. Across the United States, insurance rates are exploding. In some states, average premiums jumped over 25% in just a few years. And for younger drivers, some are paying more for insurance than their actual car payment. Think about that. You buy a sedan for $400, but insurance costs $370. For EV owners, the situation is becoming even worse. Why? Because modern cars are no longer simple machines. They're rolling computers, packed with cameras, sensors, AI driving systems, radar modules, battery systems, and expensive parts that cost a fortune. A tiny fender bender in 2026 can now cost thousands. Even replacing a headlight can reach shocking prices. And insurance companies know it, so they raise premiums again and again and again. Most believe prices depend on age, car, and history. But in reality, companies are analyzing far more. In 2026, many insurers use advanced risk algorithms. These systems examine hundreds of hidden data points: your zip code, your credit behavior, your driving times, your braking patterns, even how often you touch your phone while driving, and sometimes whether people similar to you statistically file claims. That means two people with identical cars and clean records can still receive wildly different prices. One pays $120, the other pays $310. Same city, same age, different data profile. And most drivers never realize it's happening. Then came the biggest shift in modern insurance history: tracking apps. Companies began offering safe driving discounts. Sounds harmless. But behind the scenes, something bigger was happening. Drivers were voluntarily allowing insurers to monitor behavior in real time: speeding, acceleration, phone usage, hard braking, late-night driving, everything. Some apps even track cornering behavior. And in exchange, drivers receive discounts, sometimes massive. For cautious drivers, savings are huge. But critics say these apps created an era of surveillance driving. Because now, your insurance company doesn't just insure your driving, it watches it 24 hours a day. Now here's where things get interesting, because while millions overpay, smart drivers are learning to fight back. This is called price optimization. The longer you stay passive, the more likely you are to overpay. But drivers who compare quotes before renewal often discover dramatic differences. The longer you stay passive, the more likely you are to overpay. But drivers who compare quotes before renewal often discover dramatic differences. One company charges $500, another offers similar coverage for $280. Why? Because every insurer calculates risk differently. And in 2026, quote comparison has become one of the most powerful money-saving tools in America. Insurance companies love customers who combine services: auto, home, renters, motorcycle, life. Why? Because bundled customers are less likely to leave, so insurers reward them with lower rates. For some families, bundling cuts hundreds from monthly costs, and many Americans never even ask about it. In 2026, low-mileage drivers are winning big, because insurers now heavily reward reduced driving. If you work remotely, drive less, or avoid long commutes, you may qualify for lower premiums. Some Americans are even switching to pay-per-mile insurance systems, meaning the less they drive, the less they pay. And for urban workers or remote employees, the savings can become massive. Electric vehicles were once marketed as the future of savings: lower fuel costs, less maintenance, government incentives. But many drivers overlooked one growing problem: insurance. In 2026, insuring certain EVs can cost dramatically more than gas vehicles. Battery replacement risks, high-tech sensors, expensive body panels, specialized repair shops, long repair wait times. Even minor accidents can trigger enormous repair bills, and insurers respond by raising rates. Some EV owners were shocked to discover insurance costs nearly erased their fuel savings. But smart EV drivers are adapting, choosing cheaper to insure models, increasing deductibles strategically, using telematics discounts, and comparing insurers aggressively. Now comes one of the most controversial parts of American insurance: credit scores. In many states, insurance companies analyze financial behavior when calculating premiums, and the results can be dramatic. Drivers with lower credit profiles may pay significantly higher insurance costs, even with clean driving histories. Critics argue this unfairly punishes struggling Americans. Supporters claim statistical risk models justify the practice. But either way, millions of drivers remain unaware their financial profile affects car insurance pricing, meaning a better credit score could sometimes lower your premium more than improving your driving. Think about how strange that sounds. America's roads are changing, fast. In 2026, distracted driving enforcement is intensifying nationwide. AI traffic cameras, phone detection systems, automated monitoring technology, and stricter penalties. Insurance companies are paying attention because distracted driving claims cost billions. That's why some insurers now offer discounts for drivers who avoid phone activity behind the wheel. Others penalize risky behavior through telematics, meaning your smartphone habits can directly affect your insurance costs. For younger drivers especially, this is becoming a major financial issue. If you're under 25 in America today, insurance can feel brutal. Some young drivers pay over $500 monthly for basic coverage, and in high-risk states, even more. Insurance companies argue younger drivers statistically file more claims, but many young Americans feel trapped. High rent, expensive cars, fuel costs, and now, skyrocketing insurance. So what are smart young drivers doing? Joining family policies, taking defensive driving courses, using telematics discounts, choosing older vehicles with lower repair costs, and avoiding sports cars entirely. Because one flashy car choice can financially destroy your insurance rate. Not all American drivers suffer equally. Where you live matters enormously. Certain states now face extremely high premiums due to accidents, weather, lawsuits, vehicle theft, and repair costs. Urban drivers often pay far more than rural drivers, and some zip codes have become insurance nightmares. Move a few miles away, and rates can suddenly drop, which means in 2026, your address can affect your insurance almost as much as your driving. Here's something most insurers rarely advertise clearly. There are dozens of hidden discounts: safe driver, student, military, good credit, low mileage, paperless billing, automatic payment, defensive driving, multi-car, and loyalty. But many customers never activate them. Why? Because nobody asked. And sometimes, insurance companies won't mention every possible savings option unless customers specifically request it. That means millions could be overpaying simply because they never asked the right questions. Experts believe the future of car insurance is moving toward total behavioral pricing, meaning premiums based almost entirely on real-time driving data, not estimates. Actual behavior, your acceleration, reaction time, driving hours, weather patterns, maybe even AI cabin monitoring systems. Some experts call it fair, others call it terrifying, because in the future, your car may report your behavior before you even realize it. And the safer you drive, the cheaper your life becomes. So, what are smart American drivers doing right now? They compare quotes aggressively, review policies every renewal cycle, drive less when possible, bundle coverage, use discounts strategically, improve credit, avoid unnecessary claims, choose repair-friendly vehicles. And most importantly, they stop assuming insurance prices are fixed, because in 2026, they're not. Insurance pricing has become a giant dynamic system, and informed drivers are learning to navigate it. But there's a deeper story here. Auto insurance is no longer just about accidents. It's part of a larger data economy, where companies monitor behavior, calculate risk, predict actions, and price people accordingly. The safer you appear, the cheaper life becomes. The riskier you seem, the more expensive everything gets. And many Americans are only now realizing how much personal data shapes modern financial systems. This isn't just about driving anymore. It's about digital behavior. So the next time your insurance renewal arrives, look carefully, because behind that monthly payment is an invisible system analyzing behavior, habits, data, and risk. Some Americans are losing hundreds every month without realizing it. Others are learning how to legally fight back, not through scams, not through fraud, but through information. And in 2026, information may be the most valuable insurance trick of all. Because the drivers who understand the system are often the ones paying the least. This is Auto Insurance and EV Savings. Subscribe for more deep dives into America's changing economy, technology, and hidden financial systems. And remember, the future is changing faster than most people realize.